When a life insurance policy was issued, the policy owner designated primary and contingent beneficiaries. Several years later, both the insured and the primary beneficiary died in the same car accident, and it is impossible to determine. This is a common disaster clause. Where is it at? Oh, which of the following would receive the death benefit? The contingent beneficiary, because there is one. If there wasn't one, then it would go to the insured's estate, like you said on the previous question. An applicant for insurance misstates her age at the time of her life insurance application is taken. The misstatement may result in
B.
nope.
A.
Yep. They'll still pay, but they're just gonna adjust the death benefit to the correct age.
Okay.
Representations are written and oral statements made by the applicant which remember this one? It's a vocabulary word.
A. Guaranteed to be true.
Nope, that's warranty.
Representation. D.
Yes, D. Considered to be true to the best of the applicant's knowledge. Yeah. Next one. Delete. Which is true about spouse term rider? Spouse term rider.
B.
Coverage alone. I'm gonna go with A. It is a level term insurance. There it is. Screenshot that. So B sounds like A too, right? Coverage is allowed for, oh no, it says unlimited. Nope, it's definitely limited. All right. If an insurer withdraws a portion of the face amount in the form of accelerated, by the way, this stuff is all states. This is going to come out on every state of the United States has this stuff on the test. So just in case you're wondering on the replay. If an insurer withdraws a portion of the face amount in the form of accelerated benefits because of the terminal illness, how will that affect the payable death benefit from the policy? Oh, we went through this already. This is a repeat. All right. Remember that?
So the answer would be D?
Yep. The answer is going to be D. The death benefit is reduced. An insured owns a life insurance policy to be able to pay some of her medical bills. She withdraws a portion of the policy's cash value. There are limits to withdrawals. Okay, this is universal life. We got this one. I mean, you know, now you're kind of going on repetition, but if you're studying, all right, like me, I'm not gonna read the rationale, but if you haven't mastered it like I have, well, at least enough to pass, then you should always read the rationale. Always just let the rationale sink in so you understand. Okay, why the answer is the answer. During partial withdrawal from a universal life policy, which portion will be taxed? Partial withdrawal. Well, if you take out interest, you're gonna have to pay taxes on the interest, not the principal, because the principal is your money. Make sense?
Yes.
An insurer states her age as 40 on the applicant. When she dies, the insurer discovers that she was 37. What's gonna happen?
D.
Yep. That's right. Good job. Life income, joint and survivor. Joint and survivor. Guarantees what?
Guarantees A.
Yep. It guarantees income for both people because survivors until the last one dies. So the income stops when the last one dies. What option is being utilized when the insured accumulates dividend at interest and then uses the accumulated dividends plus interest and the policy cash value to pay the policy up early?
D.
Mm-hmm. D. Great job. The accelerated benefits provision will provide an early payment of death benefit when what?
A.
Mm-hmm. Upon submission of a death claim under life insurance policy, when should the insurer pay the policy benefits?
Is it A?
Within 2 years of date of loss. Under life insurance, when should the insurer pay the death? No, that's too late. That's too much time. Immediately after receiving written proof of loss, in the next anniversary after the state of the insured has been settled. No, it has to be B. It has to be pretty quick. You know what I mean? Immediately. A, C, and D sounds like they're procrastinating. They're lagging. No, the insurance companies are not allowed to withhold proceeds. The clients need it right away. So
Mm-hmm.
okay, next one. Under which of the following circumstances would an insurer pay accelerated benefits? We did this one already, huh? B, diagnosed with cancer. We'll do another one after this one, and then we'll be done. The life insurance policy clause that prevents an insurance company from denying payment of death benefit claims after a specified period of time is known as the incontestability clause. We came up with this one too. Remember this one? We got it wrong.
Yeah, I did. I was trying to answer it, but I was taking too long.
That's okay. Which of the following is true about class designation? Ooh, go ahead. This is a new one.
Would it be C?
Mm-mm. So,
Oh.
what is class designation? That means you name the beneficiaries without giving them a name. Sounds weird.
Okay. Like my
So, for
children.
example, if I want to give my children the money, then I'm going to put all children equally. You see that? So I didn't have to
Mm-hmm.
name all three children. I just put all children equally. Boom, that's it. Which chapter?